So dear Forex traders, welcome back to the channel, Millionaire Logistics. Trust you guys have been benefiting from our Forex trading analysis and Forex trading strategy and Forex trading education, guys. So in this particular content, guys, we've really done a lot about the strategy that we share and the education on how to trade consistently profitable in the market and how to at least analyze and understand the market in simpler ways that you never thought of. Okay, so in this particular content, guys, it's going to be an exclusive one and quite an extensive one as well. So I'll indulge you guys to really be patient about this. Okay, so in our previous content, the one we published just yesterday, we did share just the next 15 minutes video just to share with you where we took our trades from and the analysis, and same thing based on the same principles, based on the same ideals, and based on the same concepts. And this concept actually helps us to gives us an edge in the market, most especially the MLX IVT trading tool that we've developed and trading sessions, which you've seen very much in our previous strategy that we share and education too. You can as well attest to the fact that, hey guys, we trade Forex differently. So in this particular one, guys, the 1 hour video, we're going to be sharing extensively on the ideals and concepts to employ that before we take any trade. So it's going to be include our thought process. It's also going to include the normal market structure that we've been sharing with you guys, the Fibonacci tool that we use. We're going to practically demonstrate everything as we've been doing so far. So guys, if you love the idea, don't forget guys to hit the like button, and don't forget to share your thoughts in the comment section as we trade Forex in Millionaire Logistics. So like I said, guys, we're still going to be working with our 15 minutes chart, but then we're going to be looking at our daily chart. We're also going to look at the 4-hour chart, and we're also going to share with you guys, should you be looking for some foolproof, we did share an analysis, should I say analysis, and also the complete trading system. We're going to be looking at that directly from the YouTube channel to maybe just watch a few minutes from that video to actually show you guys what we meant then and how we were able to forecast the future outcome of the market just from that video. And we're still going to come back here. Okay, so here's how we're going to start this particular education tutorial video and perhaps share some insight so you can analyze the market yourself and also trade profitably on your own independently. That's just the ideal and that's the goal, right? So we'll be back testing the market from the 19th because we shared that the video we're going to be looking at, the short clip, it's going to be from, I think, from the 19th, or as much as we can, because the market, I think I see this move here because this move was a move we caught just up to this particular point here. So the move to the downside was about 84 pips, but we just got off the market with, I think, 50 pips of this particular move for that day, and then we started hunting the market the next day. So guys, looking at the daily time frame, okay, first off, this is what I want to bring your mind to. As you can see, the chart here, it's well charted, it's well plotted. We have here a moving average, guys. From the incept of this channel, we've been using the moving average. What you see here, guys, is the exponential moving average 20 from the weekly time frame, okay, but right here we have it as the exponential moving average 100. So guys, I'm going to go over to explain this again, even though we've done that before. And always, I'm still going to be explaining to you the principles and the ideals and why we use this exponential moving average. First, guys, I'll share with you what the moving average simply means. It's a simple tool. It's what you can find on your chart. If you come here, right here rather, the indicator list, you can very much, when you go to trends here, you can see this, the moving average. So if you click on the moving average, we have here 200 because the initial moving average we had was the 200, but the moving average method, there's the period. This is where you set your 100 or 200. In this particular case, on the daily time frame, it's actually 100. But I wouldn't want to mess these configurations up again, so I'm not going to be putting those parameters here. Rather, I'll be explaining it to you. and how you can also apply that on your chart. It's a tool that you find easily on your chart. Okay, so we have here the period here to be 200, and you can change yours now based on our ideals and advice or our own trading concepts and all. We use the 20 exponential moving average 20. But when we do that, the only thing we want to change here is the period. Remember, just here, the period. And then we come down here to the MA method. MA means moving average. Moving average method, we don't want to use simple because the simple lags, right? So when we talk about indicators, most of the common indicators that you have here on the chart are all lagging indicators. That means the price may actually form the whole technical analysis, and also then you then see the indicator. The indicator reacts to the price, but it's slower. That's why it's lagging. Okay, so it just has to do with the time of reaction. But from our experience and encounter, we've actually found the exponential moving average to react faster to price than the simple moving average, and that is why we use the exponential moving average. So remember, guys, you have here the exponential moving average 20, and then you apply on the close. That's the only thing. You can choose whichever color that's suitable for you. In our own case, you can see here we use a gold line, right? This gold line here. And the reason why we use the gold line, guys, there's no other thing attached to it. It's just to portray that Millionaire logistics color, which is gold and black, and just the chart, red, sell, short, and the green, buy, bull, and all that. So it's just about the aesthetics there, the color coding and all. We'll talk about that also. Now, when it comes to the visualization, this is one thing you also want to put into cognizance. Okay, so the visualization here, you have here all time frames, but because we want this particular moving average to show only on our weekly chart, we don't want the indicators to be clustered everywhere, okay, on every time frame. Okay, so we wouldn't be choosing all time frames. Rather, we'll come here and we'll choose what? Weekly time frame. So when we choose the weekly time frame, guys, what that automatically does is to show this particular moving average and moving average configuration, the whole line here, on the weekly time frame alone. Okay, now when that is done, we press OK, and that's all. All right, that's all. Then we come back to the same parameter again, and we use indicator list, and we add another moving average. We go on and we open another moving average, right? Now in this particular moving average, guys, we use what? The 100. Instead of the 200, we use the 100. Instead of the 20, rather, sorry, we use what? The 100. That's the period. That's what's going to change. Okay, and the MA, the moving average method, still remains what? Exponential, right? Now, this is the symbolic reason why we use 100. If you recall, we use 20 exponential moving average 20 on the first period, right? That's the one that's applied on the weekly time frame. So for this daily time frame, we use the exponential moving average 100. Now, this is the interesting part. Where we got this ideal and all from is analyzing the weekly chart. We want to analyze the weekly chart, but at the same time, when we look at the daily chart, we want to still be getting approximately the same information, the same price point, the same moving average area, on the daily time frame as well. So we're looking at this kind of, we want to see similarity, we want to get the same thing. So we can look at the daily chart at the same time, and we just know what's going on the weekly chart by what? By just using that moving average tool. Remember, guys, I've still not told you what the moving average is used for, but we're still going to do that shortly after this. Okay, so why we use exponential moving average 100 on the daily chart? Now, we have used the exponential moving average 20 on the weekly chart. And remember, guys, we're trading Forex. So, and the Forex market is usually open 24 hours in 5 days. So from Monday to Friday, you have the market open. So we have 5 days of daily price action to deal with. We have 5 days of daily price data to deal with. We also have 5 days of 5 different daily candlestick bars to deal with. And when we want to plot a moving average or want to get some information from the moving average, we want to see that same data being into cognizance. Okay, we want to put that into consideration too as well. So since we have 5 days, on the weekly 5 days on the weekly chart. So 1 week actually makes what 5 days, like 1 week equals to 5 days and 5 days equals to 1 week, and we're using exponential moving average 20 to have the weekly bar. We want to get that market synergy from on the weekly chart. Okay, now translating into the daily chart, guys, we now use what exponential moving average 100. Why we use this? It's very simple, guys. Now, owing to the fact that we're using the exponential moving average 20 on the weekly chart, on the daily chart, we're assuming that we are having 5 days. So we're doing the simple math of 5 days multiplied by the exponential moving average that was applied on the weekly chart, which is 20. And when we do that, guys, 5 times 100, 5 times 20, simple mathematics, we have what? 100. So that's why we apply that on the daily time frame as well. So guys, the period here for the daily chart remains what? 100, and the moving average method remains what? Exponential. And then when we come to the visualization, guys, remember, we don't do anything on parameters, on levels. I mean, on levels, you can just leave it. It's not really necessary. Okay, now when it comes to visualization, okay, rather than using all time frames, we just go and select daily time frame. Okay, so when we select daily time frame, guys, what this does is automatically the moving average configuration, the parameters and everything applies and appears only on the daily chart. Now this is the magic, guys. This is our pound USD daily chart, and looking at the moving average, you can see how the moving average is coined out. Very sweet. Now if you come to the weekly time frame, guys, you see the same. This is the same moving average configuration, guys. Exponential moving average 20. If we should track this, you should be getting estimates as to where you find the price. So I'll simply do that right now by marking this particular area so we get to understand it in practice. Okay, now this particular area on the chart, as you can see, this is the line where we saw the moving average. So this is the moving average coming through. Now if we backtest this same price to here on the daily chart, you will see that approximately price is still at that particular area on the daily chart. Now the significance of this is that whatever analysis we draw from the weekly chart automatically aligns with what we have on the daily chart, because a lot of traders here find it difficult to know the direction of price simply because they have different indicators telling them different things at the same time. Now if you should apply a simple exponential moving average 20 on the weekly chart and apply the same exponential moving average 20 on the daily chart, believe in me, you'll be seeing different things. You know, one could actually be telling you that no, price is not at the lower high. One could be telling you on the other way, on the other chart, that price is actually there. So for you to have synergy and a very convincing and reflective thought of price direction or sentiment, it's very important that you have your indicators rightly. However, guys, we just don't rely on the moving average, because the moving average here, guys, this is where I tell you exactly what the moving average is meant for. The moving average, guys, just gives us a price data if the price is in an uptrend or is in a downtrend. Okay, so when price is trading above the moving average, we assume the price to be what? In an uptrend. Practically, guys, this is what we want to highlight here. Okay, now this right here is the moving average. Okay, now if the moving average, if the price is trading above the moving average, let's say this is our price, right? This is our price is going to the upside. This, we assume that the market is in an uptrend. So whenever the market comes down to the moving average, at this point price comes close to here, we're expecting to buy the price, because we assume, you know, we expect the price to trade higher. Why? Because already the price data that the moving average has gathered has shown that what price is in an uptrend. And when price is in an uptrend, guys, we want to buy the dip. That's simple. We don't buy the price when it's when it's going to the upside or when it's already moving up. We don't try to buy the price at this point. No, we want to buy the price when it's low, because we're trying to buy low and sell high. That's the very binary of thoughts when trading. Okay, now as price moves to the high, to the upside, you find the moving average adjusting to this price movement. So let's say perhaps at this point, guys, remember this right here will be a low. a time to buy, and this right here will be what? This right here will be a higher high, since I didn't use this price. Okay, now when price comes down to this point, you shouldn't be surprised when you see the moving average actually adjusting to what the price movement. So when price comes to this point, guys, this is what a higher low, and this is the point where we want to buy again, right? So as to expect that the price will what? Go higher and form a higher high. So that's exactly what the moving average tells us. Just simple things. Hey, I'm in an uptrend. Hey, price in a downtrend. So for as long as this price what? For as long as price trades what? Below the moving average, guys, we're expecting that what? The market is in a downtrend from the higher time frame perspective, because guys, right here we're dealing with the daily time frame. And remember, guys, if you look at the weekly chart, like I've shown you here, the moving average will give you the same exact information that it gave on the weekly time frame. So we have that synergy of price, sentiment, and direction. Okay, now looking at this price right here, now what we can see here on the chart is that price in a downtrend. And just like the illustration we did here, when we assumed or use some schematics here to show how the moving average will react to price when it's in an uptrend, let's do the same thing for the chart we have here. Now you see right here that this is price was making a move to the downside. Now whenever the price goes up, right, close to this moving average, and because we don't have what the price breaking to this upside, changing direction, we assume what the price will be in a downtrend. And you can see here that in fact at this area here, the price reacted and what came further, forming what? A lower low. Okay, so right here what we have here is what? Price moving to this point. First off, we have a low here, right, and then we have a high at this point, right, and you see price come to the downside, forming what? A lower low. That's market structure. All right, now when price goes up, you see how the moving average adjusted, and it came right here to this level, and price at this point formed what? A higher low. Now higher highs and higher lows, lower highs and lower lows are concepts and market structure concepts that, guys, we've been applying for long, and we've actually been using too as well. All right, so as price comes to the downside, the market structure changes. It still moves in line, right? We have the higher high here, we have another lower low formed. Okay, at this point you find a higher low here, same one, and you find price breaking here, you find the lower low, and so forth, so on and so forth. Now, guys, what we've been able to do is to simply what? Deduce this price movement by simply using what? The moving average. Okay, so guys, in the next episode, okay, still on this same concept, we'll be sharing with you how these structures are formed while in the thought process. That's the fundamentals and the news, the data, and how we analyze them. And for that particular segment, guys, we'll be looking at what the fundamental analysis will be going on to the browser, and I'll show you how I analyze the chart or analyze the market even without looking at the chart first. All right. Okay, so guys, like I promised, guys, I'll be sharing with you the thought processes and fundamental data and how to make fundamental analysis all by yourself. All right, now, guys, for the benefit of not wasting time, remember I'm using the browser here. Okay, so this right here, this is the US non-farm payrolls report, right? And it's the US non-farm payrolls report is in fact a very, very important data that comes from the US. And guys, before we look at this, we want to think about how price moves. Okay, now I've always had this thought and ideology about the forex market that it has more to do with real life trade distribution, real life currency and various data that has to do with a whole lot about our life. Anything that includes the movement of goods and services, the transfer of value from currency to currency, all that actually affects price movement on the chart. And one of the things we have to think is this: what moves the price? Now we're going beyond technical analysis, beyond reading candlestick patterns, beyond reading the color codings there. We've gone beyond hammer and the whole a whole lot of things that you hear about forex trading, and it just tells your mind about, hey, enter sell when the price goes up and enter buy when the price comes down and all. So let's look at the various thought process here. Right here on the screen, you can see Bloomberg News, where someone is trying to give a forecast and all about certain economies of the country and all those things. Various, very various information. Okay, so analyzing the market too, one has to think thoughtfully how you would react as an investor. Let me say you want to buy a house somewhere in a different country. Why would you want to? You know, the reason, what would be the reason why persons will be migrating to from one country to another country? That's also another factor too that may influence price. And remember, guys, we're dealing forex here, foreign exchange. We're also dealing with economies, and these economies, guys, are not a matter of hindsight. We're dealing with economies with countries, right? So whenever we want to talk about the pound USD, it's as though we can also talk about the Australian dollar and the US dollar. We're also talking about the New Zealand dollar and the US dollar. We're also talking about the euro, right, against what, the US dollar. Now, why US dollar? Now, this is because the US happens to be the biggest economy, half is in US dollar. So that makes the US dollar a very major currency and a determining store of value for other economies and currencies as well. So whenever we look at those trade opportunities, it's very important that we look at things we can relate to, currencies we can relate to. So guys, don't tell anyone this, but this is the exact reason why I don't trade boom and crash, because most definitely I find it difficult relating with those assets in the financial markets. Okay, so we'll be looking at the US economy right here, because from what it has been, the US economy, as we have established earlier, holds what, the largest economy in the world. All right, now guys, I like trading the currencies because we have two different pairs. Whenever we trade this market, you know, despite the fact that we're trading what, derivatives, contract for differences and all, we want to make profit off what, price movements, right, speculative price movements. We're dealing with two different currencies at every given time. Okay, so we have here, let me see, for instance, we have the pound and we have the USD. Now, by virtue of having these two currencies, guys, remember from the basics, although this is really not the basic class, but where it's okay for us to look at it, because this will also narrow down to the news and the data that's very much important for us to form a sentimental bias as to regards to the movement of any currency pair. Okay, now we have the pound and the USD. Remember, guys, if you find this anywhere, you'd be told, and it's in fact true, that the pound is what, in this particular setting, the pound here is what, the base currency, while the USD is the code currency. Now, it also corresponds with the fact and the initiative that I've developed earlier, that the USD what is the what is a reference price, right, for the commodity and goods of for any country. You find people, most countries and all, they have their reserves in the USD, and you find even the net worth of persons and high value celebrities and high value persons, you find their net worth most times priced in the US dollar, regardless of the country they come from, because aside US dollar being a safe haven currency, which I'll explain later, and aside US dollar being a kind of global peg to value of goods and price and services and everything, the US dollar right here happens to be what, a quote currency too as well. Now, in this particular pair, we find US dollar being the quote currency. Now, simply to put on the chart, we've explained this before. When you see a chart, a forex chart of pound USD, the prices, all the prices we have, all the prices you see, there's none of them that is a pound price. No, they are all priced in the USD. They are all US dollar based price. That's exclusive for major pairs like the pound USD, the AUD USD, the NZD USD and all, right? You find all the prices you find here are what, quote prices, right? And the pound there remains 1. So whenever we see such price, guys, we have in mind at the back of our mind that, hey, when you see 1.092 blah blah blah, 1.092 is what, USD, 1.092 blah 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 USD. is equivalent to what? £1 or one whatever is the base currency, and that code currency is what determines what the value of what £1. So with that said in mind, guys, well, when we look at the pound and what the USD, what comes to my mind especially is here I'm dealing with two countries here. First of all, I'm dealing with Britain first, because the Britain is what? A country, and the pound is what? A store of value, a means of exchange and all for Britain. And aside that, we know very much that the pound is being used what? Mostly by what? Britain, in what? In London and all, right? So we're dealing with the British economy when we're considering the pound, to trade the pound. So what goes into our mind is whatever is happening in Britain at the moment, in London, in one way or the other will affect what? The pound. Just the same way we hear myself that's in Nigeria and a whole lot of things are happening, and we find that the naira itself is losing value, and all those things are losing value. The naira is losing value because the country perhaps may have been perceived by persons as not safe for investment, and maybe the economy is actually failing and all that. So the same thing applies to all these major countries regardless, even though they could be doing better than Nigeria. But remember, we're dealing here with the US too as well. Now, one thing to have at the back of your mind is this: countries compete with countries, countries compete with countries, economically and all. So from the USD here being the code currency, it's the major reference in this particular pair that we have here. Now also, whatever happens in the US too is something that may affect the pound USD greatly. Right now I'm using pound USD because mostly when we go back to the chart, you find out that where all our analysis, most of them is being based on the pound USD, all the strategy and all that we're sharing. Now I'm going to throw more light on that later on, but there's a reason why. When we start dealing with what time of the trade and the reason why we choose various sessions to actually trade, we're also going to be looking at this same reference while we do this. Okay, but let me make it short and let's look at the reports literally. Okay, so for this particular section, guys, for the purpose of time and all, because I want to make this as quick as possible, right? We're dealing with the US non-farm payrolls report. And guys, the US non-farm payrolls report, guys, is a report that shows what the number of jobs that were created in the US, number of jobs in what the public sector, private sector, aside farming jobs, right, aside agriculture. So this particular figure shows what statistically the number of jobs that are what created in the United States. Now, because the United States is actually the biggest economy of the world right now, whatever news or data or event or whatsoever that happens in the US has and in fact affects the market greatly. And these are things we put in consideration when we're building our thoughts and sentiments about any pair, especially one that is what paired to the USD. And the USD, guys, remember, the USD, without being told, is the means of exchange, means of value and all in the US and most countries too as well. So guys, for this particular non-farm payrolls report, let's look at the key things that we want to establish here. The non-farm payrolls report, unlike the intraday news that we see, is one that is being released at the first Friday of every month. So if you look at this release date here, guys, if you look at the release dates here, you find that every date here corresponds with a Friday of a new month. Right now, that's one key thing to also note. Okay, now we want to do it very briefly. We're just going to be taking some price data here, maybe just say from April 1st 2022, right? Well, we're going to be looking at the price detail here, and we'll be analyzing like from this perspective where the price will go and all that we established right up to this very moment. Okay, now this was in April 2022. Now guys, one thing to also notice that the price report you get here is from the previous month, okay, from the previous month. So this date here, April 1st 2022, was the date that it was released. However, this is the first Friday of what? April, right? But then the data here shows data from March, right? So it's like things that have happened, jobs that are created, and it's being filed and then reported in what at the end of that month. So it's reported in what April 1st for reporting March activities or data. Okay, now we find here key things too. This is the time of release. Time of release here is what? 2:30. So 2:30 p.m. 2:30 p.m. on Friday, on a Friday, first Friday of the month. However, guys, this website I didn't tell you, but you can see up here is investing.com. So typically I'm used to the reporting style from investing.com, and is what I've been using for a long time, and is what I still use. However, sometimes guys, there are other things I'm still going to show you later on, but mostly we've done the most of the job easier for you forex traders and for ourselves too, by putting all this into consideration and building our MLX IVT tool. But let's look at the bedrock. Okay, so right here we have headlines here, we have actual, we have forecast, and we have previous. Now the actual here shows the current price, the current data, current number. That's the one that was released on this April 1st, right? And we also have the forecast here. Remember guys, previously I told you that, like in the video, the short video I showed you, where we saw someone from Bloomberg analyzing the market and all, just sharing forecast as to what economies are doing, as to what they're expecting. So before the market, before the data is released, there are projections from fundamentalists, economists and all. We don't tamper with that. We let them do what they do. So they give forecast of where the number of jobs, the number of dealing jobs here, number of jobs and employment more. So they give forecast of the number of jobs that they're expecting or they are projecting, and what they give to is also instrumental to the chart. And remember also too that institutions actually see all these things. They hear this news. Major corporations, big companies, and people who actually shape the economy or determine the economy of any nation, they make use of this data that comes from very seasoned professionals in the economy, economists and analysts, and also they give their projections too. And then so that's where you find this particular price here. So you find two data like the one you have up here, and then the previous, you also have the previous. From the previous now will be what? The previous number that was given, right? So if we actually want to look at it practically, the previous one will be the actual from March, right? So if March 1st actual was what? 678k, and then that 678k means that the number of jobs that were added to the US economy is actually 678,000 across, right? And then we have here 750k. So from 678k to 750k, what happened? I'll explain that to you. Usually after the price report has been given, within the month there is a review, and there could be an upward review or downward review. So in this particular case, there was an upward review. So guys, without wasting much time, if from this data I can as well just tell you, hey, that at this point in time, from this particular March 4 2022, pound, the US dollar was strong, hence the pound USD continued in a downtrend. But then let me make you to understand why I will do that each and every time I see this data in the market. Okay, now, so from the previous here, I said that this, when there is a review, you find this previous here higher than what the actual. Otherwise, if there's no review, it will be the same price. Now, how do you know if the price you reviewed won or not? This highlights, this orange dot you see here helps. So when there's an orange dot here, just know that the price was actually reviewed, the data was reviewed, and there was an upward increment or whatever in price, right? Now, so what we've established from here is that this is the previous price, this is what the forecast data, and this is the actual. All right, so what happens is you find the previous first, and then there's a forecast, and then how do you now make up your mind and say, hey, I think this is going to go like this when there's an actual price? I'm going to explain that to you. Okay, so let's not waste much time. Let's go on to June, right? So for June 3rd, 2022, you can see all this data here actually gives almost the same information. It's just the same thing, the same trick that you can use to analyze them. So I'm just going to do that so we don't waste much of our time on just one idea. All right, so right here we have what 384,000. That's 384,000 jobs was what added to the US economy in the previous month. So in this particular case here, the previous actual data, which is 298k, was reviewed, and what it came down. So this one shows what a downward review of that data, because the numbers fell, right? But it's still previous. And then the forecast was that 268,000 more jobs will be added to the US economy, right? This is what it means. So simple thing, the US economy at this point had 384,000 jobs. That's it. And the forecast was that 268,000 more jobs will be added to the US economy. However, guys, instead of 268,000 jobs, what happened? 378,000 jobs was in fact added. That was the actual. So this was what was released on what? July 8, 2022. On what? You have here 2:30 p.m. But guys, it's 1:30 p.m. actually. 1:30 p.m. right? Because for investing here, there's a 1 hour price gap, but there's a 1 hour price difference, from when it was and where it is. Actually, I mean 2 hours price gap. So this data was actually released 12:30 real time, 2:30 what you see here. All right, that's the exact reason why I use investing.com, because I actually understand how this price stuff works. All right, so when 372,000 more jobs was added to the US economy, the question is why? Now, with this particular statistics, in a situation where you find you're expecting more jobs to be added to the US economy, some number of jobs, and then they beat their expectation and even more jobs are added to the economy, that simply means that the economy is doing favorably well, comparatively well. And at that point in time, guys, the US dollar will be strong. That's just the basic part of it. The US dollar will be strong. Now, when the US dollar is strong, guys, on the chart, immediately I'm focusing my mind on a bigger picture. Within that month, all through the next month, I want to expect every other fundamental to be in line with this particular thought process. The thought process I could share in under content, but very simple to keep it short. Within that time, I will be expecting the CPI to be high, Consumer Price Index. I'll also be expecting the unemployment rate to be low, right, at that point. Perhaps the hourly wage and all could be minimal or depending on some factors. But since there are more jobs in the economy, I believe there will be more persons buying goods and ordering for goods, buying things, and also globally, there will be money in the economy, right? And that shows what an economy that is doing well, all right? As opposed to other things, when there's money in the economy, there will be borrowing power. Investors will be willing to go to the bank, borrow some money, invest, go risk on, because the economy is doing well and it's comfortable, to invest at that point in a very much a thriving economy. So these things will reflect on the chart by what? Making the USD strong. A whole lot of persons, a whole lot of institutional players will want to take advantage of that and also inject money into the economy because they are very much confident that the economy will do well in the long run. That's just it. So let's just analyze one more and see. Then we'll go on to what we're expecting right now. So this will be like an analysis, all right? So the previous here, at this point, you can see that in this point, there was a downward review and it's highlighted. The color code in here is red. So for this particular month, that's September 2nd, 2022. And guys, we analyzed this, this was reflected in our analysis, and I'm going to share that on the chart too as well. The actual content, the actual video when we're sharing analysis on the pound USD. So we have here 526,000 jobs, and the expectation was that 300,000 more jobs will be added to the economy. However, what was published, the data that was published was that 315,000 more jobs was added. Now the question is, did the economy do better at this point, or did it do less? Now the right answer there will be better, because as you can see, the color coding here is green, and numbers don't lie. 315,000 was in fact more than what was forecasted. So therefore, the USD remains strong. And if we look on the chart, you see that on the long-term perspective, in the mid-term, the pound USD has been bearish. Now, why do I say pound USD? Why will I be trading pound USD as this? Comparatively, there's something I just do in my mind. I classify currencies into different ones, because I trade currencies, yeah. So I have currencies that are commodity-based currencies that I call commodity-based currencies, and I have the ones that are currency. So when it comes to the pound I classify as a commodity-based world, a currency-based world economy. So when I look at the pound USD pair, I classify it as a currency-based pair. But when I want to look at pairs like the odd Australian dollar USD, the odd USD, I classify it as what? A commodity-based pair. And when I also look at the NZD USD, I also classify it as a commodity-based pair. So for pairs like the pound USD and the euro USD, they are classified, in my own case, for my own concept, my own ideology, as currency based. Okay, so when I want to use this kind of data to analyze the market, after I look at the fundamental aspect of it and build that bias, I want to be looking at those pairs that are relative, very much relative to this analysis. Doesn't mean that the odd USD being paired to that wouldn't fall in line, but pound USD and euro USD, when it comes to non-farm payrolls and some other fundamental data that surrounds currencies, right? I look at the pound USD and euro USD. They'll react faster, right? But then when I want to consider things, maybe the price of goods and services, or if there's inflation or not, anything that has to do with currencies or reserves that are commodity based, I want to be doing odd USD. Like there was a time I traded odd USD at the inception of the Ukraine war with Russia, and I was long on Australian dollar USD. I went long. In fact, that trade was actually one fantastic trade that made me some cool amount of money and pips, right? Because at that point in time, there were shortage in commodity and all, and from Ukraine, because of the war and all, and looking at Australian dollar, the Australian economy proved to be a commodity based country. And from one news I analyzed, I saw that these guys were showing strength, that they had enough, and they were able to sustain that. They were able at that point to sustain Ukraine for the meantime. And Australia is very rich in tin, a whole lot of commodities, tin, gold, and their reserves and everything is they have reserves in gold. And at the point where investors and most countries will want to be holding back, want to be going risk off, they'll be looking at safe haven pairs like the gold and all. And definitely, I just knew, hey, the Australian dollar will do well. And looking at it in the chart, I saw some opportunities to maximize, and I took the trade. While I was short on pound USD and euro USD, reason being that at that point, these guys are currency based, and definitely they rely a whole lot on Russia. And if Russia are blocking their resources, blocking their gas flow and all that, definitely it will crumble a whole lot of economy that are on that hemisphere, even more than it will affect the US. So I had to take that risk. I saw a chance in the market with confirmation from the moving average there and some other technical confirmation. I took it. So that's all about this. So for this particular month, we're looking at October 7. October 7 will be the first Friday of October. And we have here 315K. Let me remove this. Okay, we have here 315K. 315K, same. And what is being projected here, the forecast is that there will be 250,000 jobs added to the US economy. Now the actual here remains blank until then. Believe me guys, if the number here happens to be, if the number here, the report happens to be 200k, right, the US dollar would actually fall, right, and the pound on the other hand will what? Boost, will go to the upside. So if this number happens to be lower, if the actual data here happens to be lower than the forecast, guys, we'll be looking at hunting overall mid-term long opportunities on the pound USA. Now guys, also remember on the normal scene, there's a new ceremonial head in London right now. So there's a king has already emerged, right, and within no short time there will be, you know, new regulations, new laws and all that may boost the British economy and all. So we just want to expect that something positive may happen, but we're looking at the US non-farm payrolls and we're thinking, because it's quite close, the first Friday, if this number drops, right, we want to see at least a corrective move on the pound USD chart, and that would actually hold maybe a move holding up to 100 or 200 pips depending. All right, so guys, the key thing to note here, I believe from this particular one, we've learned how I look at the US non-farm payrolls. We've also looked at what the data, previous, forecast and actual, and how to, from what we see here, not what you analyze, what you get from this resource. Remember with the time too, that you should be looking at it. We established that it's 12:30. You should be seeing that report here, or maybe 1 hour late. 12:30 on first Friday of the month, you will see the actual report here, and I very much share how I look at it and how I analyze this. So guys, with this, we'll go back to the chart and we'll be looking at what time of the trade, Fibonacci retracement, and we'll also be doing some back test. So guys, see you. Okay, so guys, we're on the 15 minutes chart, 15 minutes pound USD chart. But before we just go through this analysis, guys, let's quickly go to the YouTube channel and let's see about that analysis and the first strategy that we shared, and how we were able to analyze what will happen in the future from what we had. And this particular one, guys, will include what? It will include how we incorporated and used the MLX IVT and trading session, and how we also made use of the Fibonacci tool. Okay, so guys, let's just flip over to where the YouTube channel. Okay, so guys, just as I said, guys, we'll be looking at the channel here directly from the YouTube channel, so as to see the previous analysis where we shared that, and this was recorded and shared on the 19th of September. Yeah, so we actually want to see just that same idea that we shared and the analysis that we're sharing, that we use the MLX IVT tool and our trading concepts to establish a sentimental bias for where the price will head next. So this is a video that was done, it's actually on the channel, it's there, you can see it, but we're just going to go straight to this chapter. I'm going to go to the complete strategy and chapter. So trading, you can write MT4, and we will be looking at the same thing on the MetaTrader, on the MetaTrader 4. Okay, and just right here, guys, we have some tools that will help you, and like I told you, these tools were developed by us for the benefit of our trading, of course, and for the benefit of our loyal subscribers and also. So guys, without wasting much of your time, let me just go straight to the point. Let me forward to the point where we established that, right? You have this when institutions want to move the price rapidly in their favor, and most times they actually head back somewhere to fill this price. Sometimes it gets filled up to the origin of the price, it gets filled up to this point, but normally what we look at, what we expect is price to get filled to either this level, the 38.0, the 50.0, the 61.8, or the 79. The Fibonacci tool from the high to the low, right? From the high to the low, right? You can see that after here we see decided to take the risk of this move, saying that this has plot that has been plotted automatically through our development of our tool, some certain parameters that we put, very complex parameters though, that we put cognizant down to where to this supply to the demand zone, rather to the demand zone, and then you see these reactions in price. So guys, my risk here will be taking this price up from here to where, targeting the 38.0 right here, which would have given me what, so Monday guys. So for Monday, I think this is the exact part guys, till Monday. So from Monday you can actually see what we're expecting. As always guys, okay, we're still mid-month, and from every indication guys, from the fundamental perspective, I'm still expecting pound USD to continue just a little bit to the downside. So I'll be expecting price to get up to this point, depending on how it moves on Monday, but still come further to the downside. Okay, so that's all. That's what we can see here guys. We're expecting price to come further to the downside, right? That was on 19th of September when we shared this. So we're going to be looking at the chart as to what happened on 19th, right? It was premiered on 19th, on the 20th, and in the future. Okay, so this right here guys is what we saw. This was where we met it, and exactly as we anticipated, exactly as we analyzed and shared, you can see how price tapped into the zone and it came to the downside as we expected. Okay, now guys, very much this is the reason why we actually advise a whole lot of you guys to request for the MLX IVT tool and the trading session guide. Now it's also advisable to use our recommended broker for this, because all these directions, all this stuff you see, the technology and everything, we got some broken fragments somehow, but we got some very key information from our brokers, the liquidity providers as well, so as to get these areas that shows the market flow and order flow, right? And this is not actually an easy task, but guess what, we're giving you guys for free. We're giving everyone who wants to make use of this for free, right? So as to help you in your trading as well. So all that is expected guys is for you to ensure that you're subscribed to the channel and you also learn how to use it the exact way we use it, to that by learning gradually from the contents, the information, the idea and concept that we are sharing on the channel, because to do you more good than you to do to us. Okay, so like we said guys, the market actually went in that direction as we were expecting the pound USD to remain bearish. You see how the price fell and even up to down to this point. All right, so let's do the major thing that I want to do here. This is on the 19th, and let's do the back testing. Right, you can see how from the high to the low we have this. Right now, how we got to this point. Now first off, we want to plot the reference, because first at this point this was the reference. Let me use this box here. At this point here, this was the reference, okay, for this day, right? The 38.00 at least, or the 50, but it starts from here. So this was a reference, but then as you can see here, price did not even get to that point. The London session started earlier. The London session rather, you can see that the London session up to this point, the price fell lower, right, to this point before the beginning of the London session and New York. So guys, why do we actually consider the London session and New York session as optimal time to hunt the market? Now this is another key question. Why do I always say our London session and waiting at the beginning of the London session? That's where I look at the market structure, the high of the Tokyo session the last day, the high of the Tokyo session and the low of the London session, or regardless, before I start trading. Key. I'm going to be sharing this for free guys. Now considering the fact that I'm trading the pound USD, aside the fundamental that we shared earlier, that we're dealing with two different countries here, the London majorly that uses the pound as a means of exchange and store of value currency, and the US economy. Remember this there's a common sense here. When you break down trading sessions into bits, we're looking at the London trading session, and what usually happens in the London trading session, this is the same time, guys, that people go about their normal business, people go about their work. That's the most active time of the day. When people are mostly active, there are financial transactions here and there. And significantly, guys, within those time, that's when you have those hedge fund institutional traders in their big trading floors, speculating price, also trading the market. So there's a very high potential of getting profits within those particular time, because that is the most active time of the day. Now, human life, walks of life, that's when their banks are open, facilitating transactions within or outside the borders of the country and all. And in what currency will they mostly be facilitating this transaction, guys? The pound. And then if there are more international transactions and everything, definitely you have more global deals and global transactions within those time frame. Not mostly when everyone is sleeping in the country. Okay, now again, I also look at the New York section, guys. Now, New York section in this reference, we're also dealing with what USD, which is the code currency, and we also want to take cognizance of when is the business day, the business time, right, of that particular day. Now, that particular time here that we see as 1 p.m. by my own time, because I'm in Nigeria. But if we're to track this time in the New York for persons who are in the US, guys, that is their morning. So that's like their 8 a.m. or 9 a.m., right? And that's the time where major financial dealings, major financial transactions will be done during the most active time of that day, from the morning time and whatsoever. And now remember, guys, also that New York too holds one of the largest trade centers in the world, the New York Stock Exchange. And we also know that there are very much hedge funds, big institutional traders in their trading floors, speculating and trading the US dollar at that particular time. And guys, it holds a potential or a high probability of what? Getting some price moves in real time from the market. So that is the reason why I place more emphasis on trading within the London and the New York session. However, guys, note this concept and ideology doesn't really work on all pairs. Say we're trading pairs like we're trading minor or exotic pairs, and we're doing the Mexican peso against one other crazy currency. I know we would want to develop this same ideology and concept to suit what countries that basically transact in those currencies. Now, this is the difference. Okay, so if I want to be trading some other inside pair, name anyone, maybe the Hong Kong dollar against the Mexican peso and all, I want to know, hey, these two countries, when is the most active trading time? When is their morning? When is their midday? When is business transactions mostly facilitated and all? These are the key things I want to look at. That is even before or after I've done my fundamental analysis of those countries. So that's the main reason why, as against many forex traders, guys, I try to look at the forex market more reflective, more relative to real life, so I can be able to, hey, aside the fact that I'm looking at this very complicating candlestick colors and all that, I want to have a grasp of real life scenarios in totality before I can then determine the risk I want to take in the financial market. So with that said, let's go back to what we have here on the chart. So we have here this particular move. Sorry guys, I must have forgotten where I stopped. Okay, these are reference zone here. These are first reference zone, and then we want to use the same thing. Now we have a first reference zone, and the price closely reacted at that level, right? And then we want to do a simple, the highest point and the lowest point before what? Before price. Now, I'm not just using highest point and lowest point. Let's make something real clear here. I'm not just using highest point and lowest point, guys, but there's also something, a better representation, guys. Remember, guys, that this is the opening of the day. Now, this is the aside the highest point, this is what we can see as a low or a high, whichever one. But since it's the highest point that the price has gotten to in that Tokyo session, this is like a high. You can call it whatever. But before the opening of the London session around this price at 8, this is obviously a low, right? So at this point now, you can very much deduce that price actually, after rejecting this low, price went to where? The 61.8. This is what we see here. Between 61.8 and 79, there's a 70.5 ratio here, which I believe price rejected to. And without straining ourselves much, right? If you look closely at that price, here, London section just opened here, making its move toward a resistance level. Remember, guys, we've developed the fact that we're looking at an overall downtrend. Okay, now at this point, maybe one would decide to scalp. You could scalp between these levels here, but definitely it just holds very small profit. So at this point, guys, seeing this reaction around the 61.8, this is a very cool place to actually take price from, and maybe setting your stop loss 30 pips or 3 pips to the high side regardless. And you can see this massive drop. I will be targeting here 29 pips, here or here. Now, guys, in an exclusive content, we'll be sharing how to take profits with just this simple ideology and strategy. Is different. You know, we can target here the minus 0.27 or minus 1.62. Now, sometimes because of I'm looking at the gap too, you know, the gap, the range that I'm targeting. Otherwise, traditionally, I would just want to do the zero level, the range level here to take some profit and leave the market for that day. But you can very much see how it works, and you know how it works in real time. Okay, now this is it for that particular day. Now, going forward, we could do this all day long, right? High, first off the high and the lowest point of the day, right? And we come here to this next day, we see price at this point, the price actually traded within that range. Now, if you look very much closely at this for the next day being the 22nd, very interesting one here. We see how price opened on the Tokyo section. Remember, guys, that within this time frame and this time frame, I'm not active. This is very early in the morning. I will be in bed at this time. I will be in bed. So perhaps I'll be opening the chart at very early, 7:45, and all my systems up and running. And we find here, this is the London section opens at this point. So within this place here, within this particular area here, you can see this price is quite insignificant though, but it still can be accounted for. In the market, right? It still can be accounted for, where we have to draw adjust our Fibonacci tool, because we want to capture what the low before the London session, the lowest point before the London session. Now, where's the lowest point before the London session? That should be this price. And when we see the London session here, guys, believe me, if you have the MLX IVT tool, you will exactly know the direction to take this market. Now, at this point, guys, we see this price movement after here within this range. You will just see it. Now, from this point, guys, you can well target where the 38 level. From this point to where the 38 level holds 50 pips, and then you to target toward the 61, which is high. The 61 level, guys, this is about 90 pips, just in a matter of hours, 1 hour tops, and you're off the market. Right, that's how beautiful it is trading with MLX IVT. Okay, now at the New York session too, you see this move, but definitely after making this profit, I would want to look at that market again within that time. But with all these moves too, guys, in the previous content we shared this a little bit. With this kind of move, making this all bullish move to the upside, it's possible to actually trade in the opposite direction, right? It's possible to actually trade in the opposite direction. After this, seeing all these moves, this rally to the upside, I want to look at the New York session here opening, and at this point, this is the New York session, right? Opening, I could be targeting a retracement, because with this, guys, don't forget, with this price move, it's possible for price to come to react at the 79 level and then move to the upside. It's very much possible because there has been a kind of price imbalance somewhere around here, seeing all bullish candles to the upside. Could be institutions and all pushing price, first loading orders to push price in a preferred direction, and after some time, guys, they will still come back somewhere within that range of price to refill their orders, to get more orders in, and that will actually be a likelihood scenario in the market, regardless. So it's not hindsight. It's possible for price to have, see the way it reacted here at the 79, price reacted to the upside but was stopped at the 38 fib level, which you can see here, and then price ranged a little bit and fell off to the downside. So that's one thing. Sorry, I'm about rounding up, so I'm rushing so I can meet up other schedules too as well. But then obviously we're still in the downtrend after this move, the consolidating move. You can see how price came down here. Now this was a very sweet move on Friday. I missed it, honestly. I did, yes, but looking at the market, it's very much easy to know what must have happened here. First off, yes, we're still in a downtrend, and price is expecting price to very much come. This is the highest point of the day, this is the lowest point, and from the lowest point to the highest point, you see one is met first, and it shows here that price may actually go to the upside, but after this move, this particular move here, that wasn't dominating because price was still ranging around here, though still around the 79.9. but on the next day, guys, this time I'm sleeping, so I must have seen this market around here, obviously reaching for this range, and with this move, guys, and seeing that I have a new reference here. Let me move this to, can I move, okay, this to here. I have new reference levels here, and I also have new reference level here, right, showing that there's more pressure to the downside. So it's possible that the market may still be falling regardless of this. And guys, remember that before now we've established sentimental bias that pound USD is bearish. So that alone is key to a whole lot of things, right? So owing to this, I just hope if you can test this on your own, if you can request for the MLX IVT, test it on your own. If it works, guys, perhaps you could have some confidence trading it like we do. So right here, we're wrapping this up shortly. So guys, if you've actually come this far, it's for your own good. It's very much encouraging. But don't forget, guys, to share your thoughts in the comment section so we could actually make contents to suit your questions and inquiry, including how to get this tool, guys. Remember, you just have to book for a session with us, which is totally free too as well, and then we could share with you how to install this, send it to you. You can after you set up your channel, install it for yourself and trade on your own without the help of anyone, my guys. Okay, so right here we have this. From this point here, this is the Tokyo session, right? And before the London session, okay, the lowest point before the London session will be here, right? The lowest point before the London session will be here, and we have this move right here. So the London session, we had this wrong. The London section before the London session is this is Tokyo. Yeah, the London session is here. So this is what we'll have before the London session. We have this right here, very small. This is the London session. Now the lowest point before the London session, if you look right here, already we're having a knot. We're having like a compass, a directive compass somewhere around here, right? And then let's say we miss this move totally, we miss this particular move, but within that London session, guys, we have this, because remember we're dealing structures here. So if we have here as what the highest point of the day, and we have this price fall, to the down point. We could have a low here. What we now have as a lower low, a higher low, right? A what? A lower low, and what? A higher low. So within this time, maybe I've missed an opportunity. I'm seeing the market, but I'm very well seeing this move. This is it, to the downside. And if you leave that trade running, perhaps you would have captured all this move. But then because no one knows the next direction that the price will make, it's very much advisable to have a piece of the pie and leave the market. So guys, that will be all, guys. If you enjoyed this content, don't forget once again to subscribe to the channel, and don't forget to like, don't forget to share your thoughts in the comment section, and don't forget to request for the MLX IVT tool. It's really going to help your trading, guys. So till we see you in our next content, guys, cheers and safe.